debate is not just about legality. It is about how we best protect our interests. And our interests are best served by a strong and vibrant, growing European economy. Currently, we do not have that, and the reason we do not have that is the euro. The idea that somehow the solution to that is more euro is no more credible than the opposition bench's suggestion that the solution to a crisis caused by more borrowing is more borrowing. In protecting our interests, we need to know where those interests are, and we need to be modest and recognise our only limited influence we have on this. In terms of Greece, I believe that Greece would be far better off were it to leave the euro, were it to default, were it to devalue, were it to price its way back into the market, encourage our constituents once more to go on holiday in Greece, and that way it will recover in a way it cannot staying within the euro. But that is a decision for the Greek people, and one on which we have precious little influence. The area I would like to concentrate is that of Ireland, because yesterday the Taoiseach announced that there would be a referendum in the Republic, and that would be to reaffirm, or otherwise, the country's commitment to the euro. So Ireland faces a fork in the road, and I believe Ireland has three potential choices: either to stick with the euro and the programmes being imposed by them, to reinvent its own currency, or to once again re-establish a relationship with sterling. Now, in December of 2010, I commissioned an opinion poll across the Republic of Ireland by a company called Red Sea, and they interviewed a representative sample of 1,000 Irish people. And somewhat over a third of those agreed that in light of the current financial crisis, they would support Ireland leaving the euro and re-establishing a link with the pound sterling. We've heard from the Prime Minister earlier that while the Eurozone says we will only support the Irish people if they vote as we tell them to, the UK will support the Irish people whatever choice they choose to make in this referendum they face on their future. And we in this country have very clear interests in Ireland. We heard last year that we were exporting more to Ireland than to all of the so-called BRIC countries. Actually, that has now changed, and we export 8% to the BRIC countries, but only 4.5% to Ireland. That's because the Irish economy has contracted so much that there's been a very significant negative impact on the UK, and particularly on Northern Ireland, in terms of our exports. Irish migration has turned from net migration from this country into Ireland into very strong migration the other way. And this is something we have allowed for many years, and I should declare an interest. My mother came to this country from Ireland as a 17-year-old nurse. And if the euro prevents Ireland creating jobs for its young people in Ireland, then we will create those jobs here, and they will come and continue and be welcomed. But would it not be better if Ireland had a monetary policy more suited to its own needs? Because what is happening within the euro is not only does the euro destabilise the Irish economy, and it will do so again, just as it has already done at great economic cost to Ireland and some economic cost to the UK, but as well as that, the bailout we are told Ireland is getting is not a bailout of the Irish people. It is a bailout of the European banks. The current position is the European Central Bank has extended, in my view, extremely unwisely, very, very large sums of money to the Irish banking system, ostensibly as liquidity support, was short term, now increasingly for 3 years, at very low interest rates. And what the Irish bailout does is replace that credit with official credit that the Irish taxpayers, not just the Irish banks, will have to pay back. So instead of the European Central Bank supplying all this credit that it realistically is unlikely to get back, that credit is being displaced by taxpayer financing from the EU, from the Eurozone, from the IMF, and indeed from this country. And the Irish people will have to pay that back, instead of the European Central Bank suffering the losses it deserves for causing this crisis in Ireland and for having extended credit it was very unwise to do. So Ireland faces a choice whether to stick with that system and grind further into poverty and give control in this Carolingian settlement to France and Germany to lord it over them, or whether once again to reinstate its own currency Were it to do that, it would need capital controls. There would, without that, be capital flight. It would not have access to overseas capital. It would need to pay the difference between its spending and tax by printing its own money. There would be significant devaluation, probably quite a lot of inflation, and in the short term, a very severe uncertainty. I nonetheless think that would be better for Ireland than sticking with the current European programme. But instead, the other option, and when I've questioned the Chancellor, when I've questioned the Prime Minister, this option at least appears to be on the table, is re-establishing that old link that Ireland had with sterling within a single currency area, which is a common currency area that makes some sense for economies that are similar, housing markets that are similar, and where that currency, where the interest rate doesn't lead to the boom and bust cycle that the euro applied to the Irish economy so inevitably does. And then instead of relying on official European credit with all the terms and conditions and subjugation it involves, or instead of cutting the country off entirely from overseas credit for a period with all the risks that entails, instead the Irish economy could look to the UK private sector, much as to a degree it now is, certainly in terms of the property market, to give that support, to give that credit that the Irish banking system cannot do itself. And when we look at our interests, we have RBS owning Ulster Bank, we have the UK banks have already written off or taken impairments for £40 billion of loans to the Irish economy. Yet Bank of Ireland, despite negative equity of perhaps 15 billion in respect of their Irish property loans, has only taken a 1 billion impairment. And they have not repossessed, very few Irish people have been repossessed. They've just carried on with massive negative equity, just about paying interest, but in the long term that cannot be sustained. And a recovery in Ireland, this country should stand ready to support that through sharing our currency if necessary, in our own interests, in Irish interests, and in Europe's interests.